Today we're going to be talking about DIDI stock and where it could be heading this week. Let's get into the video. Hi everyone, my name is Zach and welcome back to Finance Bro. Before we get into the video, I'd like to ask you guys to please comment how many shares of DIDI you have and also consider leaving a like and subscribe as it really helps with the YouTube algorithm. With all that out of the way, let's get straight into our stock for today, ticker symbol DIDI. So here we go, we have an article from CNBC.com and we are going to get straight into it. So this article is a tech article called DIDI Denies It Considered to Go Private After Early Report Sends the Stock Soaring. So basically, there were some rumors going around that DIDI was going to go private after just launching on the New York Stock Exchange this June. So they have fell quite a bit because of some antitrust laws. As you can see here, Chinese regulators have been scrutinizing DIDI for cybersecurity and antitrust matters, according to reports. And then after today, it is up 11% that they do not plan on going private to appease these Chinese authorities. So obviously people are like, okay, this is good news, they don't plan on going private, but there's obviously still some concern about them going private, or getting in trouble with the Chinese authorities. So let's get straight into it. So basically what had happened a couple days ago is that there was a pop in the shares price, and then days later the stock dropped after Chinese authorities announced a cybersecurity review of the business, as well as Chinese authorities also opening an antitrust probe into DIDI, and that was reported by Reuters, and that obviously made the stock's price go down. But after the company quelled people's fears about it, they're back up today about 11%. The reason that this is big news is that China has recently tightened its grip on tech companies. Earlier this month, officials announced measures to increase regulation of cross-border data flows, adding scrutiny to companies wishing to list shares in a foreign country. Last fall, Ant Group delayed its IPO in Shanghai and Hong Kong after Chinese regulators interviewed its top executives, and Chinese e-commerce giant Alibaba received a $2.8 billion fine for allegedly abusing its market dominance. Basically, China doesn't want monopolies, and they don't want their citizens to be taken advantage of, which is totally understandable. But now that we know everything that has gone on, let's get straight into a kind of overview of the stock and where I think it could be going with some technical analysis a little bit later. Alright, so here we are. DIDI actually does have a $47 billion market cap, which is a lot for a basically mobile technology platform that provides ride hailing and other services. Basically kind of like an Uber, but for, I believe, China, Brazil, and Mexico, and internationally. So it has a lot of different things on its app, but yeah, that's pretty much all it has. So EPS is about $2.31, and performance outlook doesn't look too good according to Yahoo Finance, but overall it is pretty beaten down, and it could see gains continuing into tomorrow with high investor sentiment right now, because it's kind of been targeted by a lot of retail investors. As you can see here, in terms of financials, they have done $135 billion in revenue, but they haven't really been increasing it too much, and their earnings have just been sitting at about negative $10 billion every year, which you don't really like to see. But in terms of Q1 of 2020 to Q1 of 2021, there actually was a very good improvement. So we are heading in the right direction with DIDI stock in this quarter as year over year, but 2021 compared to 2020 is pretty good, but 2020 compared to 2019 isn't too good. But they're doing better now. As for a recommended rating, they actually have it as a 2, which is a buy, which is pretty good. And then price targets, there was only one price target given, but the average price target is about $24. So that's almost a 3x price target here. But people are a little bit afraid that they will go private. So yeah, that is just something to think about. There is a kind of a 3x price target from one person. So yeah, that's pretty much going to be it for the Yahoo overview. Basically, you know, they're getting better in 2021. Didn't do too well from 2019 and 2020, but they are doing good now, and it's kind of just a retail investor play. And now we can get into the fun stuff. We can get into the technical analysis. So here we are. We have the 50-day SMA line. We also have an RSI and the MACD. So let's go over all of this. So it first opened at about, I believe, $16, got all the way up to $18, and then had a huge drop off when it was told about the whole, you know, investigation. And then it went down to $11 and eventually went all the way down to $7. Recently, though, after the company said to their investors, hey, we don't plan on going private. That was never really a discussion. That was just random. You know, not something we're doing. So after that, we're on the 5-minute or 5-day chart, I believe. So after that, we did sell off a bit, but then we kind of made our way back up, and we are currently sitting on the 5-day chart, which is kind of a swing trade chart. We are sitting at a 45 RSI or 50 RSI, which is not too bad. We are sitting right below the 50-day SMA line, which means, you know, it's pretty good. Fair value at the moment for a swing trade, and then we're starting a trend back up on the MACD, which is basically, the MACD is a momentum indicator, so the momentum is on our side going into tomorrow morning. If we can open above $10 tomorrow morning, we could be seeing a lot more gains tomorrow. If we are staying above $9, however, we can probably trade sideways tomorrow, and with the right amount of volume, we could start pushing up as well. But overall, you know, we did great today. Obviously, it opened a lot higher on this news, but then we kind of sold off throughout the day and then traded back up with retail investors getting into it more and more. Now, short sellers should be scared of this stock if they were shorting at, you know, around the $10 mark, because retail investors really do not play around. And I think that a lot of retail investors are getting in to this sort of a stock such as DIDI, something that is beaten down, has a lot of negative press, but, you know, retail investors say, hey, they say they're not going private, I might want to invest in them. And as long as they're trading between $9.50 and $10 tomorrow, I'd say that's pretty fair value for a swing trade, but I'm never going to tell you when you should buy or sell a stock, or whether or not you should buy or sell a stock. But that is just my thoughts on it. Pretty fair value between $9.50 and $10, but that's not investment advice. Overall, if it opens above $9.50 or $9.50, then I would say that's pretty good for it being bullish going into tomorrow when this video is being released. But yeah, that is pretty much going to be it for today. Thank you guys so much for watching. I hope you guys enjoyed. If you guys do have any questions about DIDI stock, go ahead and leave them in the comment section below. I'll try to get to as many comments as I can. And that's pretty much going to be it. Thank you guys so much for watching. Consider leaving a like and subscribe and turning post notifications on. But my name is Zach, and I'll see you in the next video.